Good morning, ladies and gentlemen. Everybody, welcome back to your pre-market live stream. Appreciate you guys tuning in, as always. So we do have quite a few things we're going to cover today. There's some good volatility here and there in the markets. So definitely got a couple things to talk about. We will touch on AMC. We will touch on the penny stocks this morning. We will touch on the market, SBCE. Pretty much whatever you guys want to talk about, we'll give you the price targets for it, and we'll keep moving forward. So we'll wait a couple more minutes here. We're going to let the stream populate before we have to repeat ourselves. All right, so the first thing that we will start with is going to be the entire stock market. All right, so yesterday, and actually maybe we'll start there. Let me pull something else up here. So last night, let me pull this up. So last night we had posted this video, dip buy. All right, stock markets selling off to this price. All right, so we're gonna pop this video open here really quickly, and we're just gonna fast forward here. Let's go into the mainstream. Cool. So this video was posted last night, Sunday, and this is where we suggested the market was gonna go to. So last night, Sunday, we posted a video suggesting that you were going to see the entire market or the NASDAQ continue selling off. You were going to see prices of this green zone. That green zone was priced from 353.50 to 352.50, but I think it was actually 352.37 at the time. But anyways, it's about 352.50 to 353.50. That was the suggestion where the markets were going to continue to through the night and into this morning. And then that would be your first location where you'd even try to consider catching the bottom of this market. So if you're someone who's into trying to find the absolute lowest possible price that markets try to reverse at to create a bottom, then that green zone is going to be the location that you would want to do that at. And it's possible that that green zone and those two prices that we gave in the video last night that we're also going to touch on here in just a second could give out. But when it's a first attempt coming into, normally they bounce. Now, that's not to say they can't come back down later in the day and break, or the following day and break. But again, when they first come into the levels, they normally like to bounce. All right. So let's take this video down. Let's go back and take a look at where the market is this morning. If you look at where the market is this morning, one second. Let me delete this one. This is the green zone. It's not green right now, but this, if I put it back on the chart, this would be the green zone, okay? So this is where the market is now today. Sold off, like I said, into that green zone. The starting points of the green zone, again, were 353.50. We bounced at 353.47. So 3 pennies off from last night. I'm sorry. Now, you can see the market is bouncing. So far, it's holding well. If we bring up the volume and we zoom in on the volume, you will see that there's been obviously buying volume in this area. Let me redo this because the chart's getting kind of stupid because I've zoomed in and out so many times. All right, so if we zoom down in here and we pull up the volume, you will see that as soon as the markets, let me bring this down a little bit and then we'll zoom in a little bit more. So you will see that as the markets got into the 353 price, the volume completely shifted to buying volume. You can see the ultimate volume system went from like some selling straight to buying volume. And that's all started as soon as the markets have gotten down to that green zone. So again, is it by accident or coincidence? I mean, maybe it's coincidence that as the markets get to 350, you see an instant shift from selling to buying. Maybe it's coincidence. I don't know. But anyways, markets are starting to try and bounce. So again, we're pretty much long biased the market today. As long as we're over the green box and not breaking through it, we're going to kind of watch things more on the dip buy and more on the long side today. All right. Nice. Sono, thank you very much. I appreciate that. Appreciate that. Hello, hello. Let's flip a coin and we shall see. Let's no flip no coins. Alrighty, so that's pretty much the market. The market is retraced down into some support levels. Now, let me give you the further analysis so that in the event we do break down, what could then happen. So here's the deal. If we were to actually break the mean, you can see a continued sell-off. This is a very, very important level that we're at right now, ladies and gentlemen. This is not to be, you know, I guess you could say, gone over lightly. So we're at the regression level. Pretty much this is a very key level. This is where stocks can have significant breakdowns. If you're coming up, they can have significant breakouts. And I can show you a couple examples as well. So in the event that the markets don't hold support here fully, meaning they just do a counter trend bounce and then sell through, you really don't have support until like down. And when I say support, I mean this is a half deviation. Like you don't really have anything all the way down until prices of 342 to 340. But again, it's kind of hard to suggest the markets will go to that price because we haven't even gone through the mean. We have not regressed through the statistical mean. So you can't really suggest a price target like that until we've crossed a support level that would allow the market to go to that price. So for the time being, you still kind of have to watch the market's long bias because you're at the mean. But if we're shifting through this green box, that's where a significant downtrend can continue to happen. And I guess maybe an example I can give you guys would be, I'm trying to think of something that did this recently. I don't know if I can think of any that actually did this recently. And I really can't off the top of my head, but just know that when things shift through the mean, that's where big moves can happen. Okay. Indicators, TTM squeeze, volume, custom volume scanner, custom volume trend, custom gap scanner, custom moving average things. So a couple things. All right. Alrighty, so with that being said, let's move on over to AEHR, ladies and gentlemen. Alright, so AEHR is a candidate today that probably going to watch on the long side, but it is overbought. But there's something in my gut that tells me that this thing can have a bigger move than what we're seeing so far. So you know as well as I do, for those that follow the channel religiously, we never really try to be long biased when the stock goes over 3 deviations, which is the blue, or just becomes a little bit more high risk, so to speak. You can see we're through the blue. We held over the blue really well. We're at purple. Purple means we're at plus 4. But anyways, you can see right now that the price of AEHR is basically at this previous high from 455, and we're actually through it. So this might be a situation where we get a breakout of this high from quite some time and continue to run today. The stock is easy to borrow on a couple platforms, which could suggest that it makes it easier to give it a short squeeze. So nonetheless, we are going to be following AEHR slightly on the long side right now. It's overbought on the intraday. It's overbought on the long term. So it's kind of sketchy in that regard. But anyways, we're going to be watching AEHR long bias. It's really hard for me to give a crazy analysis on this because it's already overbought. So I guess really what I would be suggesting is that if the market stays above 463 in the immediate, then there's a chance you can see this thing pop off again. If we start to snap below the 463 price, then that's where you would probably look for the price to maybe even revert back down to 3 deviations, which would be to here. So in the event that this top fails and we end up rolling down, I would imagine the price target can be back down to 420s right now. Okay, interesting. A long time, Jay, long time. Okay, we'll take a look here at, what was that? NXRP. Yeah, that was a candidate today that, or NRXP. Oh, well, that sucks. Yeah, well, pretty much this is reverted down to, so this morning, when we were looking at it in our premium room, I had suggested here, I'm like, you know what, if this rolls and breaks down here, we're going to see a target of this red line. So in other words, this red line with the green arrow, that was the price target we suggested on the downside for a short if the market had broken down here. We first squeezed out short sellers and then the market rolled down, but still we come all the way back down to the price target. So for the time being, I do believe that the long move is kind of done for now. And look at the volume. Look at the volume. What's happening to the volume? We went from red and now we're starting to go green. You can see that, right? If I zoom in a little bit, okay? Not that I'm saying it's going to hold there, but you can see we've gone to this level that I suggested would be a price target, and you can see there's some people trying to buy that. And the reason being is if we look at the long-term chart and we zoom in, look what's right here, this dotted line. You see that dotted trend line? That's a half deviation price. So the market effectively pulled back to a half deviation. So the best way to explain this is from this line, from this solid orange line to that solid white line, let's just say is, not let's say, it is. So again, so let me do it like this. So this, from that white line all the way up to this white line, okay, would be, that would be, where's my text? This would be 0.5. Or sorry, that would be 1 deviation. Okay? So the move would be 1 deviation. And then the halfway mark, well, that's actually kind of incorrect to do it that way. It would be like, it doesn't even matter. This is 0.5. So this is, that's the halfway mark. That's a 0.5 deviation, which is the halfway mark from the orange to the solid white line. Okay, so again, 0.5 deviations, that's the halfway marker between the solid orange down here and the solid white up there. So the way that you kind of think about this is, all right, and actually there's another time frame I could have showed you. If we go to the daily chart, you can see that we have this one here. But anyways, I might just be confusing you guys. So anyways, when the market moved all the way up to here and hit resistance, again, that's like the 50% retracement pullback, right? So for people that do like Fibonacci and they're like, oh, you know, if the market goes up to here, look at where the 50% mark's at, right? Look at that. Ready? Like, so when people are like, Connor, do you use Fibonacci? It's like, I do, but I don't. I don't actually map out Fibonacci's anymore to try to figure out where 50% retracements and things are going to be at, because the system I use already kind of has it baked in to a degree, you know. So again, as I was explaining, you know, from this green arrow to this is just calculated as 1, and then in between would be 0.5. So when you run a Fibonacci, of course, the 50% retracement is going to come in right at about the 0.5 deviation mark to begin with. So that's why we had suggested that this downside swing would probably target down to that price. And it wasn't because it was a 50% retracement or anything like that, but it kind of was. It's just because that was the halfway marker of the 1 deviation move that the stock has performed today so far. And again, you can still see like people are trying to buy that there. Okay. So anyways, what does that lead me to believe on NRXP is that I'm probably not going to want to be extremely short bias at this price. So you want to be slightly more long, looking for like a counter trend bounce. And then as it bounces back up, then you might consider to go back bearish. But for now, pretty much like neutral. I probably won't do anything with NRXP at this point. Okay. S2NW, I think, did break -1 deviation. So yes, it did, which basically means that that small swing trade I have in it, I'm pretty much going to take that off. Like I said, I sold most of it up here anyway, so it's not a big deal. I was just holding some because why not? So we've already come all the way down, so this is basically where I'm cutting that. Now, we're back towards a previous support. Sure, you could say we're back towards support. The only issue is that this bounce here with SUNW was off of -1 deviation. And that's the first attempt. Just like I told you in the stock market, the first attempt is always the best. okay? Which is why the saying in the market, the more times a stock touches a support, the stronger it is, and the more times a stock hits a certain price, the stronger the resistance is, isn't actually true. Because generally speaking, the first attempt is the strongest, right? Like this, when the stock went up here, when SUNW ran all the way up here and found its resistance, that was the biggest correction, okay? Right? When SUNW came down to support, you know, and like, no, I could be going further than I need, but the concept is when SUNW came down to here, it was testing -1 deviations for the first time. Now it's the second time. Second bounces are not going to be as good as first bounces, so to speak, okay? And the reason that's the case is because it just came from here. So if it's going to bounce, it usually is only going to bounce back about 50% of the downtrend, right? Which will be obviously less than its first move. And that's the concept. So anyways, SUNW, yeah, that's not looking good. And again, a big part of that reason is because of its larger, larger stocks within that same world. BLNK is just, once it got to the price target of the mean, it's just been selling off. And that is where we told most people to get rid of SUNW and plug. You know, we had suggested those were the price targets. So our suggested long targets in the market for plug, BLNK, were the means. And their sell-off is what's causing SUNW and a couple of those smaller energy plays to continue trending down as well. Alrighty. So let's take a look at AMC. Right? Let's like what's going on here, because, you know, just the other day we told you when it was down here, your long target was back up to this price. Well, there was a couple things we mentioned, but one of which was your long target was back up pretty much to that top, and then you would sell it again because you'd be looking for the trend to continue down. Since this was just what we would call a counter trend bounce, we figured the counter trend move would come up to here, and that's why you can see I have those two red lines. Whenever you see two red lines on my chart next to each other and they create a rectangle, that means that was the price target, right? Anytime you see two lines with rectangles on it in the red, that was a price target or a resistance or a support that we determined for the stock, whether it was the previous day or not. So you can see, right, you look at the price right now on my chart and you don't see any two red lines in a rectangle near the current price, which tells you I haven't yet done my analysis on the stock for the day. So let's go figure out where those two red lines are going to be. All right, so we're going to go to the daily chart, which actually one of my top was already on one of the time frames. So we're going to redraw all of this. All right, so we have the mean. Okay, so the same way last night, how we talked about on the video I posted, the market was going to go down to the prices that it went down to. So the same way I projected the price target for the stock market from yesterday till today is the same thing that we were doing when we were suggesting that the market was going to come down to this white line on AMC. It's literally the same thing. So right now the mean for AMC is priced at $30.86. And this one is at a price of $30.17. So, and then let me give the resistance again. Hold on one second. The resistance on the market is still from that previous top the other day. That hasn't changed too much. So the current resistance in the market right now with AMC is at 38.78, 39, which means you're not going to see a really big long breaking out move until you were to get back through that top there. The market is downtrending. This counter trend bounce back to the mean has gotten sold off pretty well, which would lead me to believe that the market is still trying to target down to the mean on the bottom, which we never actually touched. If you remember from the other day, we had suggested that the market got close but never actually touched. When that happens, it can suck in people and blah, blah, blah. But anyway, so the support for the market right now on AMC is $30.93 to $30.20. So this is ideally, I really wouldn't be a big long bias trader on AMC to begin with right now because it's downtrending. But again, if I were to try to catch the bottom of this downtrend, thinking that it's going to stop and that it's going to reverse and the prices are going to return back to the upside, in this moment in time, like today, the prices that I would even consider to do that at would be at $30.84 and $30.20. Does it mean it's going to work? No. But if you were to try to catch the bottom of the market to reverse it up, your best chances of doing so with the lowest risk probability will exist in that price zone today. Okay? So other words, pretty much what that means is I would be targeting the market down to that price, okay? So I would say sellers still have control of the market and they're going to try to keep pushing AMC down to that price. So bearish until support is met. If the stock reverses long without touching support, that's fine. That clearly just means that there's some buyers in the market that don't care if it even goes to support. And if they want to do that, that's fine. But for now, I would be bearish down to those prices. So again, Robert, right, you've always been fearful of catching bottoms, and a lot of that problem is due to the fact that this is going to sound like I'm a dick, but you probably just don't know where the bottoms are actually at, right? So like this analysis I'm giving you, those are the legitimate areas you would look for bottoms. They can fail, but normally when the prices get into true areas where they can actually bottom, there's enough participation of institutions, algorithms, people like me that would put money on the line in that area that can at least cause a small bounce to profit off of. And if then it fails, okay. But generally speaking, the levels that I'm providing to you guys are the same levels that a lot of institutions, algorithms, and computers are trading around, which means big money, smart money, big money. Big money moves the market, right? So as long as you're finding yourselves in those same sort of zones, then you'll be with bigger herds of money that can move the market. So even if those levels fail, you're generally joining a market with a lot of money that will at least cause some sort of bounce you could profit off of. And then from there, you can determine for yourself whether or not this is going to be a legitimate bottom, will it bounce or not. The problem is trying to catch a bottom in an area that really has no reason to bottom, and then it just gives out and just gets smoked, right? That's why catching bottoms sucks if you're really not in a bottomed area, because then it just can keep falling until it actually reaches like the next bottom. So that was kind of the same thing with the NASDAQ last night, right? When we looked at the NASDAQ, I think it was like somewhere around here, and I'm like, okay, well, I wouldn't want to buy it here because like I don't want to try to buy this bottom or this bottom or this bottom or this bottom or whatever, because I know that support is still all the way down to that green box, meaning we can still sell all the way down until we get to this green box. And you can see we've sold all the way down to the green box and we're starting to see a little bit of bouncing, right? So even if this bounce fails, say this bounce fails, you are still able to get in, ride one up, and then if it starts to roll over and fail, then okay, you let it go. But, that's what I'm saying, is you got to put yourselves in areas that are probably meant to have a little bounce. But anyways, doesn't really matter. DIDI. So I'll give you a quick rundown on the SPY really quickly because it's not the same as the NASDAQ, but anyways. So my price target down on the SPY today. So if you guys remember if you watched the video from last night, I think someone even commented on the video and was like, he's like, it's funny, you're saying the markets are going to bottom, but you're only talking about the NASDAQ. And he's got a very valid point, though. If you're going to try to project a market bottoming, I mean, yeah, you have to look at multiple indexes because you just have to, right? But the thing is generally speaking, whatever index starts to sell down first, it's usually going to be that one that bottoms and then creates the bounce for all the other indexes. In this sort of market situation, the NASDAQ was going to be sort of the first major index that would fall into a relatively decent support system. Therefore, we would watch the NASDAQ to be sort of the leader in determining if the markets on other indexes will bounce. So ideally, you have three things that are falling from the sky, okay? 1, 2, and 3. Number 1 is going to hit the ground first, and if it bounces, it's going to prevent the other 2 and 3, number 1, number 2, and 3, or whatever, from hitting the ground. Makes sense? 3 people fall from an airplane, okay? The first person to put its parachute out is going to cause the other 2 to put its parachute out. So if number 1 or the first guy's really far down below the other 2, and then he throws his parachute, the other 2 are probably going to be like, oh shit, time to throw our parachute. They throw their parachute. And then they all start to kind of move in unison again. That was the concept. So sometimes you don't necessarily have to look at every single market, but you just have to know which market's leading the downturn or which one's going to run into support first. That can help you indicate how the rest of the ones are going to kind of follow. Once they break support, that's not necessarily it. Again, so pretty much let me just point it this way. So this is what's going to end up happening. I'll just tell you what's going to happen, all right? So looking at BLNK, BLNK and plug, BLNK and plug. So pretty much if you want to figure out what's going to happen with SUNW to a degree, you're pretty much just going to watch BLNK and you're going to watch SUNW. And as these two stocks actually hit a decent support, then SUNW is going to bounce. So in other words, as these continue to sell down, SUNW is going to continue to sell down. I really don't have any support right now. Well, here's the thing. We just broke -1 deviation, so this is how it works. Either the market comes back up and we get back through the -1 deviation and we're going to cause a pop, which is going to cause SUNW to pop, or else let's say we don't and we just continue trending down. I'm not going to be a long bias trader on the market of BLNK until we hit the -2 deviation mark or this mark. So pretty much that's my long zone. So I would expect SUNW stays red until we get BLNK and or plug power to start reversing a little bit. And my next long zone that I like is all the way down here, or we bottom and reclaim the price of 32.55, and then we go over to plug power. Oh, pluggeth. So again, that's what's going to happen with SUNW. If you look at plug is in a downtrend over the last half year. If we look at so again, we don't really have a support system on plug down until the prices of $19.37 to, oh, and look where we're at. So again, very similar setup, almost the exact same setup on BLNK, plug and BLNK are basically the exact same. They're right now at the -1 deviation. Where is SUNW? SUNW is at -1 deviation. The market kind of moves in unison. So you can see all these energy plays are at about -1 deviation. So unless the biggest names, sort of BLNK, plug, take back -1 deviation in a bullish manner, then we're just going to be remaining bearish until those prices get down to either -2 deviation, then we'll look for a bounce. So pretty much bearish on all the stocks is probably what's going to happen. Thumbs up. But yeah, I would appreciate if the 363 of you guys that haven't already tickled the like button do so now. It does greatly help the channel, or at least I think it does. So far, it hasn't really done too much, but I can't tell you that because then you'll never hit it. So just hit it, and then maybe one day YouTube will appreciate what we do here. So that being said, I appreciate you guys. It is time for me to run, so I will see you guys tomorrow morning for the next stream. Other than that, everybody take care. Have a great day, and I'll see you tomorrow morning.